Jinesh Gopani joins us now. Let's talk markets and stocks and sectors and themes he's bullish on. Jinesh, good morning. Thank you for joining us. It is all about pharma. Do you agree with me that this is a rare sector in the market right now where there is scope for both PE and EPS expansion? I mean, everything is suddenly going right for pharma, and 2 years ago, nothing was going right for pharma.
Yeah, sure. I think after this COVID episode and the way USFDA has started giving approvals for some of the products which are short in supply, I think near term the issues around USFDA not allowing plants to run has gone away, and also there has been a lot of approvals which were pending for last let's say 6 to 12 months has suddenly got approvals. And again, I would say pharma is a very stock-specific story. Different companies have different ANDAs, different product pipelines, different chemistries, and hence it should be looked from that point of view. But nevertheless, it has been a good sector, both as you rightly said, from the EPS upgrade point of view and also the re-rating, because it was sort of I would say underweight pre-COVID. When others were overweight on the financials and the other sector.
For the longest time, you've really followed what could be called as a mandate to stick to good businesses, irrespective of the market chatter about their expenses, whether it was in HDFC Bank or in DMart or Bajaj Finance. How are you approaching that end of the market where some would argue that now these premium valuations, because of the bent of the economy, will get challenged?
Well, I think, Nikunj, we have to keep in mind that good managements drive businesses rationally, both in the good times as well as in the bad times, and that is why they get the premium for their acumen in terms of driving this business with the longer periods of time. So I think for us, I would say quality is paramount because we always believe the driver of the car is the best person who knows what's happening, what's coming ahead, and accordingly he will drive his car slowly or fast depending on the opportunity. So I think expensive is we have not made it expensive. It is more of a market dynamics. Markets have started giving them the premium, and that is because of their leadership position, their innovation capabilities, and ability to grow despite all the challenges which they would be facing in the sector.
Okay. So that's that's really what we're witnessing when it comes to the pharma names as well. In terms of in terms of the way ahead from here, Jinesh, do you think it's likely to remain a little focused when it comes to whether you want to call it slightly defensive names or even those that are playing on the global recovery? So we've got pharma. We also have, of course, the IT names in particular that are really standing out.
I think clearly still we are in unknown. We don't know how the global economy or the domestic economy will shape up. We are all expecting that by Jan-Feb onwards, we should be back to 90% of pre-COVID levels, or maybe even 100% if the festive seasons are good. At least I can talk about the domestic market. But I think this is not the time to get overconfident on any sector or become very, very defensive. I think you will have winners and losers in all the sectors, and better to just have a granular approach, stock-specific approach in each and every sector, and find your winners with a 2 to 3 year view from here on.
Okay, and in terms of the kind of timeline that you're looking at, I mean, you touched upon 2 3 years. I mean, from an investment perspective, but even in terms of the economy perhaps stabilizing, we're hearing all kinds of different kinds of projections from whether or not there will be that that clear trend towards recovery by early next year, or whether it's likely to take a lot longer across the board. I'm just talking about an overall sense. What is the kind of timeline you're factoring in?
No, I think as things stands and the kind of feedbacks we get from the company and on the ground is The businesses which are impacted only because of the lockdown are back to, let's say, 80-85% of normalcy, and the overall economy would be back to, let's say, 70-75%, because there are certain sectors which are really impacted because of COVID, be it hospitality, restaurants, travel, tourism, commercial real estate, and they would take maybe another 12 to 18 months time to recover back to their normalcy, and that would also depend on how the health crisis prevail over next 6 months, and how the vaccine thing comes into play, and if really maybe by June, July next year, are we up and running along with vaccine as well? So I think as I said, still we need to take into judgment in terms of how this health crisis will prevail over next 3 to 6 months. If the things start subsiding, the infection rate starts subsiding over next 2 to 3 months, then I think next year could be a very good year in terms of growth. How we are seeing is, leave aside Q1, which was sort of a washout quarter for the companies. If next 9 months, like Q2, Q3, Q4, if they are able to get back to growth trajectory without hurting their balance sheets badly, I think then those companies would be very well placed for next years of growth. And this would depend how the economy also shapes up by Q3, Q4 onwards, and where we are in terms of economic growth, whether we are at 3%, 4% or 5% GDP run rate, that remains to be seen.
Sure. Jinesh, we were chatting with Red Seer, which is a company which tracks e-commerce companies rather closely. And it seems that the upcoming festive season, the entire festive season is pegged to clock sales of about $7 billion. And these are just for the e-commerce sites that I'm talking about. This is a jump of 75% from a year ago. I wanted to understand, where is it that these sales are going to translate to? Because you don't buy cars and homes online. These are discretionary spends that we're talking about, because this data is restricted only to e-commerce platforms.
I think it is going to be challenging. We'll have to see how things shape up. But I guess what I understand is, barring very high discretionary spends, India is all about essentials. 80-85% of your demand is essentials, and that is where demand hopefully should continue during festive seasons as well. So I think if you see some of the auto sales numbers are also pretty positive than what we would have expected 2-3 months back. So I think as India has opened up, as the digital has taken, I would say, a front seat in terms of deciding how customer will go and purchase, I think overall things should be much better, as India is 80-85% essential requirement. And I think barring that, the discretionary spends obviously will take some more time as India opens up further, and as we have the I would say positivity or confidence of people going out and shopping in the malls.
So, Jinesh, we ask most of our experts, what is that one idea or theme that they believe our retail participants could benefit from and get rich?
I think across the board, I would genuinely say across the board there are huge opportunities. There are
seem to have snapped that line just when we wanted to know ideas to get rich for our viewers. Just quickly revisit what the market is up at. About a 0.5% uptick is what we started off the day with, and let's just see where things are settling down. We're holding on to the grains, ebbed off just that wee bit from the top though, about 0.3% higher, so much unlike that 0.5% uptick that you kick-started the day with. Having said that, the stars continue to remain within the pharmaceutical sector, be it a DRL, be it a Cipla, be it a Lupin, Natco Pharma. These are all sitting on very, very big gains. But Jinesh is back with us. Jinesh, yes, you were telling our viewers how to get rich.
I think stable, systematic investment is what all about investing in this market. I know every day you see some stocks going up and people feel left out, but I think eventually it averages out over a longer periods of time. And the importance of compounding is known when you invest at least with 3 to 5 year view. So I think staggered investments into good funds is what I would suggest, rather than playing blind in the market just on news flows, WhatsApp chats, and all together.
All right, Jinesh, we got you in a bad line, so we'll keep this one short today. Appreciate your time and thank you for joining us. Well, Pharma clearly is in a auto mode right now.